Paper is one of those sectors that is very significantly overlooked, and we have some very strong biases and beliefs about paper. And the idea of uh, this workshop is to give you a renewed understanding, a different understanding of how the paper sector works, and where we are in the cycle. Um, Before we get started, I just want to take 2 minutes to introduce the speakers. So, first of all, we can start off with Sushant Bhai. Maybe you can give us a brief about yourself, your cyclical journey, and we can start with that.
Sure. Hi, everyone. Thank you, first of all, Rahul, Prince, and all of you for joining the call today. It's not easy to take out time on a Sunday morning. Hope to make it worth your effort. So, so I've been in the markets for the last 10, 11 years or so, managing personal money and family money. Um, and I've been working for the last 15 years. I started in my family business. We had a steel manufacturing business, which we sold out. And then I've worked at a couple of internet companies in India. And for the last 7, 8 years, I've been working in management consulting through internal and external roles. I've worked in corporate strategy at Henkel, and currently I work at a management consulting firm.
Perfect. And I should also give the entire credit for, uh, you know, helping us discover the paper sector and educating us, and over the last many months. So the whole credit goes to him, because he was the one who initiated that spark, that hey, there is this space which is being overlooked. And so all kudos to you. Thank you so much, Sushant bhai, for adding significant amounts of value, and hopefully in today's workshop that can be kind of transferred to our 56 participants. um, so next, I'd like to ask Manthan to come in and kind of give us a brief introduction. Manthan, are you able to hear? Okay, wait. Yeah, I've asked to unmute yourself.
Yes, thank you, Rahul. Thank you, everyone, for attending the deep dive that we're going to present today, especially Rahul Bhai and Sushant sir. So, I'm Manthan Rastogi, co-founder of Alpha Wealth Avenues. We are a research-driven firm, and yeah, so we on a monthly basis go through all the sectors, try to understand where value has started emerging. Recently done webinars on power, then defense, now this paper, and we will be doing on the cement as well. So yeah, so happy
Perfect.
to share all the insights that we have, and we think it's an interesting space, as Rahul Bhai already mentioned.
Awesome. A little bit about myself. My name is Rahul, and Rahul Rao. I've started investing in 2014, bought my first stock in India. It doubled in 2 years, and I was hooked. I thought this is the way to go. And since then, I've been through a relatively long or short, I don't know, journey of in getting enough capital to then in October 2021 to, start doing investing on my own. However, during that time, I also started working in different bursts of period with some family offices, and I currently work with a family office as well, whilst managing my own portfolio. So it's been a very interesting journey, and I resonate with cyclical investing a lot. Um, I don't know why. And Shashank Bhai is also one of the great cyclical investors that I've come across. He's also a member of GIC, which is our Gurugram Investors Club. Many of our members are here today. So if you are in Gurgaon, NCR, please do join in, because we get to benefit from people like Shashank Bhai, and Chiranjeev sir is also on the call. And so yeah, it's a great community. And yeah, we started GIC in last 1 year. So that's broadly about myself. And I think enough with the introductions. Let's just get started. So Yeah, like I said, this is very, very interesting because there are many sectors, and paper sector, I think the our beliefs of how it works and what the reality is very, very different. And we want to kind of highlight that to begin with, right? Uh, right. So just some house keeping. Disclaimer, we might be interested in different companies. For example, I'm invested in JK Paper and Satya. Our views are therefore biased. Um, Other members might also be invested in various companies. So please be cognizant of that. Um, Myself and Shashank Bhai, we are not registered, SEBI registered analysts, although, I am in the process. Um, and Alpha Wave, which is the entity that Manthan is representing, they are SEBI registered, and they're SEBI, they have all the licenses. So this is just the broadly, how it is from a disclaimer point of view. Obviously, please use this as a starting point for your own research, not to kind of just go all in. There is a tendency to do that. A lot of people tend to, just take ideas and without applying any of their own perspectives. If you blindly follow, it really defeats the whole purpose of why these workshops exist. But I'm very confident that most of us are, cognizant of that, and we'll kind of take a more prudent approach. So, yeah. So, yeah, beliefs, is very interesting, as I pointed out. And I really love this quote because it says, "It's not what you don't know that gets you in trouble. It's what you know for sure that just isn't the case." And the investing world is a very interesting place for testing these beliefs because we have these very hardcore beliefs about how a certain sector is, or how a certain company is, or what makes wealth, or what destroys wealth. And that ends up, not always, but in most cases ends up being troublesome, especially given the fact that the way we form beliefs is a very shaky concept. I don't want to get into the psychology part of it, but we don't form beliefs based on evidence, as it should be, and testing that evidence and questioning and re-questioning. That's not how we tend to believe things about the world, right? And the equity markets are a great place. They're a great psychology lab for seeing all these beliefs in action, or how they work, how they don't work, right? So there are some of the beliefs I want to highlight about how wrong we were about some of the things, right? These are advertisements from I believe 1940s, 50s, and how cigarettes were projected as being healthy. There's to keep a slender figure, no one can deny, reach out for a Lucky Strikes, or a, very popular cigarette brand. And as your dentist, I would recommend Viceroy's, another brand. More doctors smoke Camels than any other cigarette. So our entire history uh, is just riddled with these really wacky beliefs about how the world works, and that can cause a lot of issues. And the idea as investors is we want to dispel as many of these beliefs as possible through reason, through evidence, through trying to remove our biases, etc., etc. Right? This is another one. This is, diamonds are forever. This was literally a marketing campaign that De Beers, now the largest diamond, natural diamond company in the world, that started in 1947, and they literally convinced the whole world that if you are getting married, you must buy, 2 months of salaries worth of, a stone for your loved one, and that's how, that's how you need to prove your love. And yeah, I mean, that is going on for like the last 80 odd years. It's only now recently that lab grown diamonds have kind of come in the mix. And, all of a sudden we are wondering, what's a diamond really worth? And if you see the price chart of natural diamonds, they've just been crashing, like anything, right? So another example of kind of belief that was built, through marketing artificially. Um, Similar to gold also. Um, Gold value investors like myself, we have very strong notions about gold because obviously, Warren Buffett, who we all look up to, or many of us look up to, has been very vocal. He says that gold has no utility, right? If you convert gold into a cube, it will be a large cube, and you can, rub it and you can talk to it and all that, but it's going to do nothing. It won't, grow. It won't produce anything, and therefore gold is not a and and people use that and reason that because gold is non-productive, therefore gold has no place in your portfolio. Uh, Today, of course, it is much easier to say, given that we have all benefited from gold, either as owners of gold in our households, or through gold in your portfolios. So that is completely shattered. So again, yeah, questioning those beliefs is key. There are many other such beliefs that are just really wacky. One was Suzlon. This is my personal experience. I remember when Suzlon was going through its whatever turnaround, people used to say Suzlon took, kachra hai. PSU banks were kachra for the longest period. Uh, People used to believe that government influence or government control, or I would say influence would be a better word. Defense railways, they don't make any money. Uh, we were proved wrong. People say that large caps don't give you outsized gains. Again, this is not true at all. Uh, there are large caps within the last 3 years that have done, significantly. Godfrey Phillips is one. It was on my radar. To give you full disclosure, I completely missed it. And yeah, I mean that company is up 5x since last 3 4 years. So and there are various other examples also where large companies have done significantly, better. High churn is bad for returns, or it's always looked down as कि यार इतना churn करते हो तुम investor हो trader हो क्या है. But again, I think this is an unfounded belief. Um, and even what does high churn mean? That's also another question. There is a group of people in the world who believe the earth is flat. So, so yeah, we have really, really strange beliefs about our world, and yeah, but the whole point of was to kind of begin to question these beliefs. Similarly, we have some beliefs about the paper sector as well, right? The three beliefs or our viewpoint is that paper is bad for the environment, right? Uh, Terminal value of paper companies is zero, and nobody ever makes money in paper. Uh, do you have any of these beliefs, or maybe not a belief, but in your mind when you think about paper, if any of these three apply, uh, I'd love to hear it in the chat box. तो आप मुझे chat box में बताइए कि if one of them is true, you can type one. If two, you're going to type two, or if all, you can say all. I just want to understand, uh, where you are coming from on this. So let's hear it in the chat box. We have 61 people. Ideally, I would like कि आप सारे contribute करें, participate करें इसमें. Right. So you've got quite a few answers. I'm waiting for everyone. You need to get involved, please. I know paper is a boring sector, so let's try and make it a little bit interactive and fun. Shushan bhai, which one of these did you believe before you started?
Yeah, I think paper has not made money and may not make money is something I believed.
Yeah, absolutely. Same. So paper is bad. If we go out, my wife says, don't take the bill. We don't want to pollute the environment because, paper is bad. It's harmful. And yeah, the terminal value part, I've been a personal, uh, you know, it's been a personal problem for me because I invested in a newspaper company. So there is a particular type of paper, newsprint, which is, and we'll talk about that, which is, having some issues. So yeah, broadly, I think all of us have these beliefs, and let's start off by questioning them, you know. The first one is, and sorry about the right side, my slide making skills are below par. Um, so the first one is paper is bad for the environment, right? And the idea behind this belief is that because बहुत सारे पेड़ कटते हैं, we are deforestation होता है, and it seems like everybody thinks that deforestation सिर्फ पेपर के लिए ही करता है और कोई यूज ही नहीं होता होगा, right? Um, that's not true. And secondly, since 1988, the National Forest Policy, since it was introduced, many of these paper mills have actually started to move away and started doing what they call the social forestry programs. Sorry, I'm just trying to use my pen. Yeah. Yeah, so many of them have started to move towards these social forestry programs, and a significant part of their paper is actually coming from the trees that they have planted themselves exclusively for usage of wood-related products. Uh, it could be paper itself, but it also could be MDF and other wood industries. So, for example, JK paper is net wood positive, and they tend to plant more trees every year than they cut. Similarly, West Coast paper, Andhra paper, Tamil Nadu, TNPL, ITC, they all have various social forestry programs where they actually invest significant amounts of money in R&D, uh, to develop saplings that can grow within 2 to 3 years. And they give these saplings to farmers, and the farmers plant these, and and the farmers are not really obligated to even sell it back. Of course, there's a relationship where bulk of their procurement does come from these farms, but net net, it's a great program, and I would say a very small fraction of the wood that is being used for paper mills to actually make paper comes, from illegal deforestation. It's a very small percentage. I'm sure it's still happening, right? Then, we also believe that paper is polluting. It is polluting because it requires significant amounts of water, right? And it requires significant amounts of power. Both of these metrics, if you actually evaluate, have come down significantly. For example, 75 kiloliters per metric ton was, again, this is an industry estimate, uh, and that has come down to 25 to 35. Some of the very modern mills in Europe, they've come down to as low as 10 to 15 kiloliters per metric ton. So the usage of water has also dramatically reduced, right? And these figures are just for the Indian industry. Across the world, these metrics are even better. Power usage has significantly come down. We have higher renewable usage. Uh, a lot of the heat and steam that is generated within the paper manufacturing process, that is used, for power, deployed for usage of power within, right? So it's recycled within the plant as well. And we recently had the good fortune of visiting a paper company, and we saw the factory, and I think maybe Shashank bhai, if it's 100% of their power needs are now in-house, right? So, yeah, it is still polluting. However, what is the polluting part? The polluting part is when you bleach paper, mills use chlorine, right? Now, this chlorine, when kind of disseminated as effluents in the surrounding areas, there obviously it's not very good. Um, but even that has changed, right? Over the last few years, there is something called elemental free chlorine, EFC, or I'm not recalling the exact word, where even that is not very harmful. And increasingly, there are more efforts to treat the wastage and the effluents much better, so that even that risk is reduced, right? And on top of that, if we are saying that paper is bad for the environment, what about plastics. And this is, in my view, this is a huge. Uh, this could potentially become a great tailwind for the paper sector, where as we kind of phase out on plastic or begin to use recycled plastic, uh, paper usage, should go up. There are certain sections where it is already going up, but yeah. So given all these facts, आई मीन सारी चीज़ों को अगर मिला के देखें तो हम क्या सोचते हैं कि पेपर सेक्टर कितना ही खराब होगा, और जो रियलिटी है, देर इज अ सिग्निफिकेंट डिफरेंस, राइट? द सेकेंड पॉइंट वॉज दैट terminal value is zero. Uh, what we need to understand is there are three types of paper. There is writing and printing paper, WPP, you can call it. There is packaging, right? And packaging now is increasingly used everywhere. Again, as a somewhat of a substitute for plastics. And as we'll talk about, this segment is also growing at a very healthy rate. And the third part is newsprint. And this part, I think the consensus is that this segment is going to zero. The terminal value, is approaching zero. It is not zero, but yeah, I mean, there's significant reduction. Or यहाँ पे that view is true. But the other sectors, if you look, or other types of paper, WPP and packaging, I mean, the growth rates are, yeah, they're not like e-commerce, Blinkit growth rates, but they are somewhere around GDP growth rates, right? So it's not like these segments are dying, far from dying, in fact, right? So even the belief, and this, by the way, is a newsprint capacity. Um, so reducing all the way, this chart is not showing properly, my apologies, but it goes all the way to 2024 and there's a consistent reduction. So clearly newsprints are going to zero. And the reason for that is because newsprints are used in newspapers, and newspaper circulation is also, I think that's another topic. At least in India, there are sections where newspaper circulation is kind of stable. So yeah, so that's the second belief that we kind of have, and I think it's not true. A nuanced understanding will tells us there are segments that are not growing. In fact, there are that are not declining. In fact, they are growing. And this is my favorite because मतलब पेपर का नाम सुनते ही ऐसा लगता है कि यार कौन पेपर में इन्वेस्ट करेगा, किसको, मतलब who will ever make paper? You have defense companies, you have all these, attractive and new age companies, but you just look at the results. And I'm not just saying stock price CAGR, let's put that aside because that can be a function of low multiples, XYZ. You just look at JK Paper ka PAT growth. I mean, 10 years PAT growth is 41%. How many of you would have looked at JK Paper and thought कि यार ये company 40% PAT CAGR पे grow किया, right? Now there are again nuances to this, but I just want to hear your point of view. Did मतलब 30% growth West Coast, Shishai Paper 20% growth, Satya 32% growth. Uh, so anybody, can you give me an idea? Is this surprising to you? Because it was really surprising to me when I started investigating, and I was like, कैसे हो रहा है ये? Right? Um, so please, tell me in the chat box. Were you aware that paper companies have this kind of growth rate in the last 10 years? We have 66 people here. Please, it's a small group only. Let's relax and start interacting more. Yeah. Very surprising. Samir ji says, very surprising. Never. Uh, Abhishek, please don't use your pen on our presentation. Right? So it's really shocking. And every person, back in March, actually, very interesting that back in March, I wrote an article for the Indian Express on JK paper. एंड व्हेन आई टोल्ड माय एडिटर कि पेपर पे लिखना है, ही वाज लाइक यार पेपर वेपर पे क्या लिखना है यार तेरे को, क्योंकि एट द एंड ऑफ द डे न्यूज़पेपर्स देयर इंसेंटिव इज की आई बॉल्स. ही इज लाइक हु इज गोना रीड अबाउट पेपर यार, तू जाने दे. So I showed him, these numbers, pad growth and all, and he was absolutely shocked. And this is a guy who's been in the markets for 30 years. So this is not somebody that he's not necessarily just a editor. He's actually an analyst turned editor. So very, very surprising. However, there are nuances to this. Why this number is so high, all of that. Maybe Shashank Bhai can throw some light on that.
Sure. And just to add to your point, right? So, like, I started looking at paper and found it to be very interesting. I thought, probably it's an echo chamber. I'm thinking about it over and over and liking it more and more. So, I don't remember the time, but early this year, probably March or April, I ran a screener where I filtered companies with a PAT CAGR of greater than 25%, and then I sorted them on an earnings multiple. Wanted to look at the cheapest companies, with that kind of PAT growth. And above a certain threshold, I don't know, there were some shell companies, etc. But in the entire universe, I found a lot of these paper companies showing up again and again. Uh,
Yeah.
and I think this the first column on PAT growth is a key pivot point. We will come back to this later in terms of how this is shaping up probably, and how you should also think about it differently, leaving aside the industry growth, right? Because this also illustrates in some sense that the stronger players are growing a lot faster, because the listed, the players on the screen are the bigger ones, the healthier ones, and the more profitable ones. And there is a whole chapter on consolidation and profit pool getting concentrated, which is the interesting play here.
Yeah. Yeah, so two more nuances, and by the way, this fact, even I didn't know what you said that you screened and it's surprising to me even now. So, um, but there are two nuances. As Dhruv Bhai, I think this is the same Dhruv who's also our GIC member, very, contributes a lot. Thank you so much. So his question is really good. पहले तो ये जो ग्रोथ दिख रही है वो किस बेस पे है, और वहाँ उस टाइम पे 2014-15 में साइकिल कहाँ पे थी. एंड बोथ ऑफ दोज आर वेरी वैलिड पॉइंट्स बिकॉज 2014-15 वाज अनदर लो in the paper sector. So it is a low base. But 2025 is also, is a low. I don't know if it's the lowest, but I surely think that 2025 for paper companies has not been great. And you'll see figures. We calculated the entire PAT of the top 32 listed companies in 2025 and 24 and 25. And there's a drop of more than 50% in earnings. So, I would argue that even 2025 is some kind of low, right? So comparing low to low, one, uh, it negates the low base effect, the argument. Uh, that's one. The second part is that actually PAT growth is one thing, EPS growth is another. I say this because uh, JK Paper's EPS growth, I would argue, is not as high as 41%. It's probably around 30%, right? Which is still healthy. और उसका रीज़न ये है कि बड़ी कंपनीज जो हैं दे हैव बिन acquiring companies left, right, center, and a large part of their growth has actually come from uh, acquiring different sick units or other paper mills that are not able to remain as competitive, right? And this is again, as Shushan Bhai said, this is a pattern that's been playing out, right? So yeah, the PAT growth is very high, but there are nuances. And even if you take into consideration the cycle and the low base and everything, that is still very, very healthy, right? Uh, at the very least, that belief that कि पेपर में तो पैसा ही नहीं बनता, uh, I find it hard to keep that view. Of we'll also talk about how valuations उतनी नहीं मिलती हैं पेपर कंपनीज को, वो एक फैक्ट है, right? But उसमें क्या nuances हैं, we'll get to that, right? So these three core beliefs that we have about the paper sector, in my view, are not founded in solid reasoning. And if you have any counterpoints, because again, I mean, there are 69 people, this is like a small group. Please do let us know. आपको ऐसा लगता है कि कहीं we are going wrong? Would love to hear your views, right? Again, I had highlighted the top 5 or 6 companies जो growth was good. You look at return over 10 years for these are top 32 listed companies. आप मतलब कितनी कंपनीज हैं यार. ठीक है, एज वी गो डाउन टुवर्ड्स द राइट दीज आर मच स्मॉलर कंपनीज, बट एबी रियल एस्टेट को हम नहीं काउंट करेंगे. दिस इज प्रिडोमिनेंटली अ रियल एस्टेट बिजनेस. देव ऑल्सो सोल्ड सेंचुरी पेपर करके था, उन्होंने आईटीसी को बेच दिया है. बट आप जेके पेपर, वेस्ट कोस्ट पेपर, शशाई पेपर, क्वांटम ले लो, कुछ भी ले लो, आप कहीं से भी ले लो, 10-year price returns are decent. In some cases they are more than decent, in some cases they are decent, right? So yeah, it's just hard to kind of keep on believing that paper sector में पैसा नहीं बनता. Um, so with that, I think we've tried to set a base of how we think about paper. What are some of the nuances, and why this sector is worth at least a look. It might not fit into your investment criteria, portfolio, whatever, but it's worth a look. And the idea of these workshops is to educate and grow. So what we learned today is this is how we've broken down uh, our uh, our session today. The macro setup, what is happening on the macro level, the value chain, right? Very simple paper hai. Sectoral overview, some. So what we've done is taken the largest 32 listed companies and put them into charts to give you a very high level perspective. We'll discuss, I think, 4 or 5 case studies. And yeah, they're all by different members. Shashain by myself, Manthan. We also have Charanjeev sir, uh, who would hopefully, if we are on time, he would also give his story of a company named Pakka, right, which is a small company. Um, uh, yeah, the level up your investment part is also, this is where we basically introduce our cement seminar, which is happening uh, next next Sunday, right? And then we have Q&A. So what we really want to do is we want to break it down into 3 parts. The first part is 30% of the time, hopefully, we spend here, 30% of the time on the case studies, and 30% on Q&A, because Q&A is very, very important to us. Again, like I said, the way I look at it, 70 people, it is should be interactive. We're all friends here. Let's all kind of interact, and yeah, I request you to stay as long as possible so we can have that interaction. So let's start off with the macro setup, right? What's happening on the macro level? So before I even get to this, I think we all agree that paper is a commodity. Uh, by that I mean that there is not much differentiation, right? Um, of course, there are categories, coated paper, uncoated paper, copier paper, ये वो paper, मतलब 10 तरह के paper होते हैं, but uh, within those categories also it's hard to differentiate one player from another, right? So therefore, the overall pricing really matters. Very similar to cement, actually, that we'll discuss on next Sunday. But the pricing matters. And because it's a commodity with very little differentiation, what is happening on the industry level, on the sectoral level, in terms of demand and supply, that can impact your per metric ton or per kg uh, pricing or realizations, right? So that's a significant driver of your profitability. Uh, so the macro setup, what has happened is that पिछले कुछ सालों में you look at 2021 से लेकर 2025 and you look at the 4-year CAGR, this is thousands of tons. We have China, which was 145,000 tons, uh, and it's now at 547. So China has been dumping their paper on us like there's no tomorrow. As usual, they do it with a lot of other stuff because they have huge capacities that are not being consumed domestically, right? So 30%, sorry, ये थोड़ा सा कट हो गया. This is 30%, Asian countries overall, and South Korea 11.72%. Even within the last 1 year, if you just look at the quarter, April to June, 27% and 17%. I mean, that's a significant amount of paper that is being dumped. And to give you an idea, Indonesia has 8x. I don't even know how these capacities have come online, but I read this in a DGTR filing, Director General of Trade Remedies. So whenever the industry is fed up, वो एक साथ मिलके बोलते हैं सरकार को कि रोको इन्हें, क्योंकि हमारा हमारा काम नहीं चल रहा है. So DGTR files these investigative reports, and in that report there are some very very fascinating facts, and that's where I got this figure. Uh, but yeah, it's just how does that even happen? So because of that, a lot of these countries have been just, just chucking in paper. By some accounts, apparently some of the paper is being dumped at less than the price of pulp alone. I don't even know how that's possible, but yeah, that is just yeah, ridiculous. And उसकी वजह से uh, उसकी वजह से combined, by the way, this is one factor. So pricing has been impacted, right? For reasons explained. At the same time, the raw material, which is virgin wood and agro waste, the prices of both have increased. Virgin wood मतलब जो plants, sorry, जो trees को काट के जो chip करके जो pulp बनाया जाता है, that is virgin hardwood. And agro waste is obviously agricultural waste that is used to also make certain types of paper. We'll get into that part also, that how the industry is structured into what percentage of the industry is majority on agro, how much is on virgin wood. But what's happened simultaneously is that raw material prices have increased. So during COVID-19, uh, plantations were not as high, and at the same time, capacities came online over the next 2 3 years, which led to a raw material shortage, combined with the fact that the same amount of wood was also being demanded by high growth MDF and ply industries, basically the wood industries, right? So raw material for paper players, and again, this idea that this shortage, by the way, is also cyclical. So every time the paper sector adds significant amounts of capacity at once, and significant amounts of capacity matlab usually these larger players tend to add way more than the smaller players naturally, given their size and scale. And all of a sudden, the trees don't grow as fast, because earlier trees used to take 4 to 5 years ka plantation cycles hota. Now they've done, they've found shorter rotation clones that can come online in 2 to 3 years. So this pattern also plays out. Now, as a consequence of that, if you look at these figures, FY23 mein 6,400 crores was the revenue. This is JK Paper's numbers, but the idea is I'm trying to prove a point. 60, 6,600 crores and 67. So, although यहाँ पे volume growth was quite healthy, it was not as low, but because pricing declined, your overall revenue growth was very, very muted. तो एक आपका top line, despite volume growth, आपका top line restrict हो गया. Secondly, your raw material prices, as we just discussed, a large part of JK Paper's raw material is not large. I mean, all of their raw material is virgin hardwood only. To my understanding, they do not use any agro waste for making their paper. उसके क्या रीजंस हैं, क्यों वो ऐसा करते हैं और नहीं करते हैं, वो चीज़ें भी डिस्कस होंगी. But raw material prices of 43.6% of revenue now is 61%. So raw material prices have shot up significantly, much more. Now, of course, a better way would be to actually see it on a per metric ton or per kg basis. That would give you a better idea. But again, I'm just trying to make a point here. And within raw material prices, क्योंकि हार्डवुड और बैम्बू कॉस्ट सबसे हाई रहते हैं, they've grown at 37% in FY23, 41% in FY24, 26% in. So you're getting basically a double whammy. आपका realization hit हो रहा है, right? At the same time, आपका जो raw material cost है, which is significantly improving. And because of that, your EBITDA margins have come down from 28% to 15.4%. Now, obviously, this 28% was super normal. You cannot expect कि 28% पे आएगा, कभी आ गया तो आ गया, but this is, you cannot factor that in. Uh, Neither do we think that 15% is where JK Paper should settle at, and we'll discuss in more detail later on. Gross margins have obviously compressed, and PAT margins have gone down, and like I said, volume growth tha, but I think this is some sort of error here. I'll fix that, right? So again, the idea is that you're getting squeezed on both ends. Uh, so now what's changing? And why are we somewhat optimistic that shayad say the worst is over, right? There are three reasons for that. One is that anti-dumping duties have been, minimum import prices have been imposed on virgin multi-layer paper. This is the packaging board. Pierce का डब्बा होता है, the various FMCG, whatever paper is used is packaging, right? And that was being dumped left, right, center. वहाँ पे हमने minimum import price impose कर दिया है, and that should help with some sort of price increases. And we will show already some of those price increases are happening. Secondly, hardwood prices are also expected to come down. And thirdly, there is a demand on the writing and printing paper. There is a very key trigger, which is the uh, national education policy, right? So all are at different points in their kind of journey to on the positive side. And let's kind of, uh, go into that. So yeah, this is basically a chronological uh, sequence of the events that have happened. ये मैंने अपने Substack पे भी लिखा था, First Principles Investing करके, and I'm basically saying that पिछले साल 2024 में एंटी डंपिंग ड्यूटी इनिशिएट हुई थी अगेंस्ट डंपिंग ऑफ वर्जिन मल्टीलेयर पेपर फ्रॉम चिली एंड चाइना एंड इंडोनेशिया. 12 मई को इमामी पेपर सेट कि बहुत हो गया, हमें प्राइस बढ़ाना पड़ेगा. 15 मई को अगेन आईटीसी ऑल्सो सेट द सेम. 30th June there was another DGTR. So another paper company announced. So we've kind of documented all of this to just to give a very to get a sense that is pricing improving. And so by doing this, it gave us some confidence that things are improving, right? So again, so all of that has continued to happen, and so we feel there is enough evidence to believe that things are on the improving side. Shushan bhai, you want to add something here in terms of increasing in paper prices per kg? Maybe you can give us a sense.
Yeah, so I know about writing and printing, and I don't know like what to attribute it to, but like at least from people that I speak to in the industry, the pricing that we've seen, it seems to be the absolute rock bottom, primarily, and for two reasons, right? One is a lot of mills are going under; they are not viable at these prices, so something has to give, right? Either if this continues for longer, supply goes out of the equation, or the government comes in and starts protecting. So as a matter of fact, this month itself, the prices have increased by 3 to 4 rupees a kg, which is almost
Which is which
eight,
is
seven,
got
eight
eight
percent.
percent.
Yeah,
Yeah, yeah, which is quite significant given
yeah,
where we
but
are.
and no reaction on in the stock prices.
Yeah, yeah. Um, so yeah, I think what you alluded to was that this whole story uh, is basically around demand, supply, and the capital cycle also, right? So this is something that we should have included in the presentation. But what happens naturally is that when prices are going, crashing, a lot of these mills are not able to operate. And so they are shut down and they have cash flow issues and all of that, and they tend to get out of the ecosystem. As some of these mills close down and pricing discipline improves, the ones that do survive tend to do very, very well. Right. So that is the whole capital cycle model. It's a great book also. Capital Returns is the book name. And for cyclical companies, ये pattern जो है वो काफी play out होता है. So if you are interested, I highly recommend checking out that book. And just to add to your point, you said कि कुछ companies are shutting down. Even in my personal experience, my wife is actually a bankruptcy lawyer. So she was doing a case in Ahmedabad, and uh, Gujarat is a hub for paper companies, significant amount. I think 150 paper mills are in Gujarat. And she was working on a case where, one of the paper companies was filing for bankruptcy. So bad for the company, but it was great news when I heard it, and I was like, okay, this is good. Competition is going to go out, and better players will remain, right? So yeah, so there are some early lead. It's not even that lead anymore because the 22nd August ko, that imposition of minimum import price was a pretty significant trigger, and yeah, so things seem to be improving. We'll see how it plays out. Uh,
Also, one thing more to track here is there is also request from the industry to have BIS standards, which the government is doing in a lot of other industries to kind of as a leeway to control imports. That might come through as well.
Absolutely, absolutely. So a bunch of government initiatives like PIMS also, right? Uh, there is a system to paper monitoring system. So how whatever the amount of paper that's coming in, it's going to be kind of looked at more closely. So yeah. Uh, then comes the national education policy. Shashank Bhai will
Yeah, I
educate
think
us.
the key takeaway is the demand for textbooks is likely to go up, and there is also likely the vision or new curriculum that might come through in this new education policy. And if that comes through, there is a huge surge in writing and printing paper because a lot of the books today are actually recycled or used second hand, third hand, so that will kind of give a 2, 3 year tailwind to the industry.
Right. Yeah, so again, in short, I think you've summed it up very well. So as and when this begins to be implemented, especially some of the more trackable things are NCRT's textbook revisions whenever they happen. I think that's going to be a great support. And there are certain companies, by the way, for those who are curious and want to investigate further. There's Navneet and there's Eschan. Both of these companies can benefit from the NEP. And Eschan, we were actually planning to do a case study on Eschan. Unfortunately, one of my friends had some personal emergencies and he was not able to present. So yeah, it's something worth looking at. Right. Now let's move on to the value chain. So far, I think we are a little behind track. Time ज़्यादा लग गया है. But so far, uh, are we on track? Are we good? If you can just give us a yes or a thumbs up in the chat, it would kind of help understand. So we have 66 members. I would love to kind of just get your all good. Let's move forward. Should we kind of increase the pace? Is it getting a bit slow? Right. Okay. So yeah, the value chain is very simple. You have again in this chart it says wood based, but it can also be agro based, right? Uh, you saw source the raw material. Okay, increase speed will do. Raw material sourcing, then you convert it into pulp, and then you make paper, then you print, you publish, and that's how the paper gets. In this case, it's the readers. It could also be packaging for FMCG and all of that, right? So nothing too complicated. It's basically that easy. If you were to go one step into it, basically the first step is to break down, and this is for the virgin wood, hardwood. You break it down into small chips, Those chips are then, treated in a sodium hydroxide, sodium sulfide. The they're cooked. Literally, the word is they're cooked in those chemicals. And the whole idea is to separate cellulose, right? Because wood has cellulose, and you separate that cellulose from the other parts, which is lignin. Lignin is like a glue that binds these cellulose fibers together. And yeah, then you get paper out, and that's how it is made. There's a very nice video that I will not be able to play in the interest of time, but I'll share it with you in the chat or whatever. This really nicely explains how it works. So yeah, again, raw material, pulping, washing, bleaching, paper making, all of that, right? So now this is a very interesting part. If some of you are getting bored with the overall GAN, let's get to the actual investable universe, because I think most of us are interested from that point of view. And what we've done is we have taken 32 companies, and we've looked at some of the high level metrics, tried to get some insights from that, right? Uh, yeah. So first, the raw material. Shashan bhai, you want to take this?
Yeah, so essentially, the three typical routes where we see in the market. One is using virgin wood. These are the large grade A mills. This is the best quality paper. This is the benchmark and sets the pricing. Players like JK Paper, West Coast, etc. They are the ones who make this. Then there are grade B mills, which are using recycled paper. These are usually the smaller ones, the long tail. The quality of the paper is usually not as good in terms of the brightness and the other attributes of quality. And these are obviously price takers. And then the third archetype is within the grade. So I would say that virgin wood is the best in terms of pricing. Second is agro, wherein there are few players like Satya, Quantum, Trident, who kind of use agro waste to as a raw material to make end paper. So this is, I would say, the second best quality, and then the recycled um, is the lowest level of quality, if I may say so. So yeah, so the economics of these three vary quite a lot because given it's a traditional manufacturing business, the raw material prices can vary quite a lot, and the correlation may not always be there. So one has to be careful in terms of what segment, the stock that you're picking in, where what is the real raw material for them, and what are you really tracking to make sure that you're playing it right.
Right. Perfect. So yeah, in fact, both these raw materials are so significantly different. They have their different industry bodies also to represent their respective interests with the government on a sector level. So yeah, um, so that's how the raw material is placed. And the second one is in terms of growth, right? So if you look at the different segments, as we discussed, that there are certain segments that are dying out, there are certain segments that are growing, there are certain segments that are, you know, uh, so there are different rates of growth. So if you look at the types of paper, we have newsprint, WPP, writing and printing, and packaging, paperboard, and tissue and cups, right? Newsprint has been declining. We already established newsprint terminal value approaching zero. Uh, Unless a miracle happens and whatever, it's a dying kind of segment. If you look at the writing and printing paper, it's growing at around 3%. The size is 5.4 million tons. Um, and within writing and paper also, there are different types of paper, right? Uncoated, cream wove, ये वो, copier paper, जहाँ पे JK has a 28% market share, JK paper, all of that. Packaging and paperboard, this is the largest of the overall. So overall capacity is 23.8 million tons. Out of that, 15 million tons is from packaging and paperboard, right? And this segment is growing decently, 7.68%. Now you might think यार 7%, 8% में हमारा क्या होगा? अभी तो हमने डिफेंस की बात की है जहाँ पे चीज़ें डबल ट्रिपल हो रही हैं. But there's another nuance to it where although the industry growth rates are not that great, by virtue of acquisitions and the supply side getting constrained, I think Dhruv Bhai or somebody mentioned in the chat also that supply side बहुत ही kind of consolidate होती जा रही है. And so even the players that survive, they will grow much faster, hopefully much faster than 7.68%. Right? Then you have tissue, which is around expected to grow significantly, but it's a very small part of the overall paper demand right now. Right? So that's how it is. India has, according to one source, we have 861 mills. Only 526 are operating. That should give you some sense of how difficult it is to kind of do business in this environment, right? In terms of consumption, again, 55% is from packaging, tissue is 10%, newspaper is 10%, degrowing, and writing and printing paper is 25%. Why this is important? Because whenever you study any particular company, it would help to kind of know A, what are the primary raw material sources, and therefore B, what type of paper they are dominant in. कौन सा paper उनका product profile, product mix में कौन सा paper है, and that would also define their margins, all of that. So it should give you a lot of the working tools for you to do your own analysis later on. In terms of imports and exports, we've already discussed. Here's a much broader perspective. कि कितनी तेजी से, the blue line is basically the imports, and it's grown very, very rapidly. Hopefully, that should moderate now, and pricing discipline should come back, right? These are the top states from a regional perspective. कहाँ पे mills हैं? So we have Punjab, we have here Satia and Quantum are the big players. Then we have Khanna paper mills, all of that. Gujarat mein JK paper has its primary unit. Then you have, Karnataka, Tamil Nadu, all of that. And then you have UP also. So that's how the industry is, right? Um, yeah, cost structures. Now let's understand what are the primary cost items for a paper company.
Yeah, so essentially, I think it's as I said, the raw materials can be different for all three archetypes. Either it is waste paper, it is wood pulp, or it is agro residue. So that's like the bulk product, and then most of all the archetypes have a huge share of energy and chemicals. That's kind of the major cost structure, and then obviously there are fixed costs on employees, etc., and then the importance of operating leverage and being able to utilize plants well, because it's a wafer thin margin business.
Right. So essentially, what we are saying is that the raw material prices tend to be around, I believe, 40, 50, 60% thereabouts, depending on the mill, depending on how you source, depending on your, a bunch of things. And then you have power costs, which is a significant cost item. Then you have water and surprisingly chemicals. So the solution in which the small wood chips are actually cooked, that also amounts for a decent amount of the total cost, right? Okay. Right. So this is where what we've done is, like I said, we've put 32 companies, and we start off with the market cap just to get a sense of how the industry is. Now you have to bear in mind AB Real Estate is had Century Ply, as we said, Century Paper. That has been sold to ITC, and the market cap for this company is not necessarily relevant, but yeah, because we sourced the data from Screener, so it came in this format. So I'm just making that disclaimer. So actually, the top 32 listed companies, their total market cap is 23,000 crores. right? To give you a perspective, uh, in terms of market cap to profit, uh, these are, if you look at it, more than 50% of the profit pool is with the top guys, JK Paper and West Coast, right? Which is not surprising, because larger companies do tend to, uh, market leaders tend to have a higher concentration of the profit pool. In terms of the profit, if as I said, 2024 में 3,500 crores was the number, and it's reduced to 1,168. So a significant decline, right? So that is why I said initially when we were making the point that the sector is, you can say that it is again a bottom. So 2015 में अगर bottom था, तो 25 में भी we are close to some kind of bottom. However, if you look at the margins and you look at the overperformance metrics of some of the market leaders, it's a difference between night and day, because 2015 May, there was a lot of those cost efficiencies that were not there, whereas in 2025, they are there. So even in the worst of times, a lot of our paper companies are still profitable, right? And so that is the difference between 2015 and 10 years down the line today. If you look at the distribution, these are buckets of around 100 crores, right? So minus 50 crores से 50 crores तक के bucket में कितनी companies हैं? We have around 18, 19 companies out of 32. So obviously a large part is towards, uh, most of the players in numbers make a small amount of profits, not very surprising. And, these are the larger players that are a bit skewed, right? So that's how the distribution looks. Of course, this does not mean that smaller companies will not make money, as I already pointed out, because rate of change play can be significant in some of the companies over there. Price returns, we've already seen. Operating profit margins, very, very healthy. These are 5-year averages. So again, if we remove the skewness from those bumper supernormal years of, say, 21 to 23, these margins would be lower. Um, but yeah, I mean, as far as margins go, it's not bad. A better comparison actually of margins would be to look at one company and see how the margins have fared over the last 10 years. And Shashank bhai will share a case study. I will share a case study and we'll show the margin trajectory of these companies over the last, few years, right? So that will give you a better idea of how the competitiveness has improved. If we chart out the EPS versus price return, we have Satia Industries on the far right with more than 55% actually their price return and good amount of EPS growth also. We have JK Paper, Quantum, Perfect Pack. It's a very, very small company. NR Agarwal. They are doing some crazy capex. If they can pull this off, it can be interesting. And a whole lot of other companies, that are across the spectrum. And some of them we'll cover in the case studies today. Return on capital employed of 2025 versus return on capital employed of average of the last 5 years. The idea of this was, I thought that, okay, in this environment, are there any companies that are actually increasing return on capital? So, and why that might be the case. So the idea was to look for anomalies और कहाँ पे थोड़ा और effort maybe you can start off doing. So Panji Paper is a very, very interesting paper company. It makes specialty paper, and it does seem by their EBITDA per metric ton numbers that their realizations per metric ton are much, much higher than even the market leaders. So that's an interesting company. So they do various मतलब different types of specialty paper. If you look on their website, it's very interesting. जैसे जो टिश्यू जिससे आप मुंह साफ करने के लिए on your face tissue, I think it's called. Uh, they make that and a whole bunch of other interesting stuff. So this is a standout. The other one is Ruchira Papers. Um, again, we have to investigate what the reasons are. I'm just showing you where ROCE has increased. Then you have Aradhya Distribute, a very small company. Uh, and then we have Perfect Pack, right? So not, I mean, just I thought it's an interesting exercise worth checking out. Quarterly profit growth, again, the idea was to look at some lead indicators that कहाँ पे profit growth आ रही है. We have NR Agarwal, this is Orient Paper. We have Magnum Ventures, Balakrishna Papers, Sri Ajit Pulp. So this is interesting. We're not doing a case study in this session, but this is a tiny company. So all the disclaimers go as far as small companies are concerned. And something interesting is happening here because, uh, you know, a significant amount of capacity has just come online. And if pricing improves combined with the increased capacity also, so this could be very interesting. However, just in the interest of disclosure, I'm not invested, and this is a very it is just an idea right now. A lot of research needs to go in there, right? So yeah, with that, I think we have given a good overview of how this whole sector is placed, some of our beliefs, and now let's move to case studies. So again, just to do a check with all our 65 members who are with us today, are we all good? Are you with us so far? Can we move ahead? So just please let us know in the chat box. Otherwise, you feel like sometimes you're just talking to yourself and there's no there's no voice, there's no reaction. So can be a little okay. Perfect. Right. So the first case study we're going to be doing is Andhra Paper, and Manthan Bhai, he'll be taking that. I just want to highlight really quickly. Yeah. So at this point, just want to take 2 minutes to highlight that we're going to be doing another session on cement. Uh, and yeah, this should be a really power-packed session, similar to paper, but probably a little more exciting. I don't know if exciting in terms of the eventual returns, but or the results in terms of the business. But yeah, there are some significant changes that are happening in the cement sector also, and we're doing a very extensive workshop. The last one we did on defense, it lasted quite a long time, 4 or 5 hours. It was very, very satisfying for us. It was hope, the reviews we got is very satisfying for some of the members who attended. I think some of us who are here, शायद आपने भी attend किया होगा, right? So that's what it is. I would now request uh, Prince, if you can share the link. What we're doing today is, I think the session is 799. If you sign up within the session, it'll be 599. But the offer will last only while we're doing this. Um, so yeah, I would really like to see most of you or all of you ideally in the session on cement on the coming Sunday. This will be recorded, so there'll be video also in case for whatever reason you're not able to attend. And yeah, this is going to be very, very interesting, right? So with that, hopefully, Prince, if you're able to hear me or Manthan Bhai, somebody can share the link in the session. And yeah, this offer lasts only while the workshop is on. So just to be clear. Right. So with that, I think I would like to invite uh, Manthan to. Are you able to speak, Manthan?
Manthan is not, yeah, he wants
Okay,
speaking
okay. I
rights.
said, yeah, I've given the request.
Okay, now I can speak. Thank you
Perfect.
so much, Rahul. Will you be sharing the screen or like should I share?
Yeah, happy to do it. Yeah, let's
Okay.
continue momentum. Mein. So
Yeah.
far, no issues with the uh, with with the screen abhi tak. So
Okay. So, guys, like we had a very good introduction about the paper sector. What are the cost structures? How the cycle has played for last couple of years, and why we think uh, we are around the bottom. I'm not sure whether the bottom has hit or not, but again, no one can predict precisely. As an investor, we can just assess a probabilistic scenario of where the margin profile would be and where we are in the cycle. So for Andhra Paper, I would just say like it was started in 1964. It was a Andhra Paper Mills. Then it was acquired by International Paper Company in 2011, and then they have acquired around 75% of the stake, and they were not able to manage it properly. We can see it through the numbers also. Then in 2019, West Coast Paper, who is again the market leader in the industry, has acquired Andhra Paper, and they have directly acquired 72% stake, and again renamed it to the Andhra Paper. So that's the history about Andhra. But again, let's just discuss, like, Andhra Paper is one of the fully integrated player. So when we say fully integrated player, it means they have their own pulp capacity. When I say pulp capacity, they have a contract with the farmers where they give lot of samplings of woods, etc. Then once sampling is grown into full-fledged trees, most of them the farmers sell directly to the Andhra Paper. That's how they secure their pulp needs. And again, it's one of the important or the key strength to be in a paper industry. So in the right hand side, if you look at, like, they had a capacity of around 2.5 lakh tons per annum, right, paper capacity, and they have a virgin pulp capacity of around 2 lakh tons, which has increased to 2.2 lakh tons in last 3 months, because they have additionally acquired, or not acquired, they were contracted with other farmers. Then they have a in-house steam-based captive power. So as we all know, captive power, or the power, is the one of the important cost metric into a paper industry or a paper company. Therefore, they had a captive power. Again, while doing the process, there is a thing called, we will cover in the next slide, and that can be used as a fuel to generate more power. So all of these integrated things can only be possible when you have an integrated plant. Right. And then APL has two mills. Both of them are based into Andhra Pradesh. Can we go
Yeah.
to next slide? Yeah. So now let's understand what Andhra Paper, like, on the right hand side, we can see there are plethora of products. So they are basically into writing and printing, and also the industrial paper. So they manufacture from craft paper to cup stock bottom and all the type of paper, like the straw that we see. They are also into that part, right? And they are into the higher grade, or a high, if we count into GSM, higher grade paper. And for that, they basically need a wood pulp, or a virgin wood pulp. Right. And since 2023, they have invested around 520 crore for modernization of their plant, again in a phased manner, and it's finally completed into July 24 as per the annual report. Then, as I mentioned, right, they have expanded the plantation drive to 37,000 acres, right? And the farm forest program, now they have around 7.5 lakh acres. So just look at the scale and how much raw material requirement will be there. Like, suppose if you are setting up a new plant, if you go and you want to set up a new plant of a paper of a similar capacity of Andhra Paper, you at least need 3,000 crore, right? And then you need to source huge amount of pulp, and you need to create a entire ecosystem around that, and that acts as a strong anti-barrier, and why any new player cannot enter into this industry. And for maybe last 10 years, we haven't seen any new significant capacity addition happen into this sector, right? And when we compare it from 2014-15 down cycle versus now, we can clearly estimate that number of players have reduced. Larger players have a very strong balance sheet, and which can also be seen into the numbers into the next slide. But let's move back into the, again, the raw material that I was saying, or the byproduct of paper manufacturing, was black liquor. And again, this black liquor can be used as a fuel to generate energy. And this contributes around 72.1% of the company's power need. Right. And again, we already know power is an important cost metric for a paper industry. Now they are expanding their capacity into the tissue paper. In the slide of the growth rate, we have seen that tissue paper is one of the fastest growing vertical inside the paper segment. So they are coming up with a capacity. Total cost that they will be incurring is around 270 crore. So looking at the numbers, right, you can just understand their market cap, their trading is around 15,000 crore, 1,500 crore. And the capex that they do is around minimum of 200 crore plus, right? Even setting up a tissue paper machine, it something costs around 300 crore or 270 crore, right? So it's a very capital intensive business. One more entry barrier why new players are not entering into this industry. And then this facility will be live in Q1 27. So maybe in a year. They have already signed an agreement with the Valmet. It's a Sweden company, and that they will provide them the machine or a production line of the similar capacity for manufacturing tissue paper. Right. Let's go back. Sorry, next slide here. Now let's understand why 2025 was a challenging year for Andhra Paper and for the entire paper sector. So their total income has declined by 14%, primarily because of the cheaper imports that are coming from China and ASEAN countries, especially Indonesia. So just a matter of a fact, like Indonesia has around 8x or 10x times the capacity what they need for their domestic requirements. That's why they are dumping at a, maybe as Rahul bhai mentioned at the start, below the pulp price in India. So the end product is available below the pulp price in India. That's why anti dumping duties is assigned in the paper sector. Again, in the raw material side also, these companies have faced prices because in COVID there was not enough plantation done, and crops or the wood does not grow in a year or maybe 6 months. It takes at least 3 years to come up with a new plantation. Therefore, due to the constraints of wood prices or a wood, the raw material prices have increased around by 9%, and it's a key input for them. Then again, they are doing a capital expenditure for tissue paper project, so that's why their finance cost is a little bit higher. One more important thing that we want to highlight is, and that's the issue mainly in the southern part, if I look so, or maybe in JK paper also, there is the issue is of strike. And so their union is very strong, and therefore the plant of Andhra paper was not producing anything for 28 days or maybe around a month just because of the strike. They had taken an annual maintenance of 22 days. Therefore, their total expenses have increased by 5%. So their realization has gone down due to the cheap imports. Cost has gone down. The cost of raw materials have increased. Plus, they have not produced a sufficient capacity because for one or maybe around 50 days, their plant was not operational. Still, if you look at the production number, it's only down 1%. Total sales is down 3%. But if you look at the PAT, it has gone down significantly because of all the things that we have mentioned. But we need to assess like whether these structures are permanent in nature or it's a temporary phase, right? If it's a temporary phase, then it will be again mean revert, and the margins will improve, and we can have a very good lever of growth for next 2 to 3 years, even without the external triggers like NEP or etc. Right. So again, in the they have basically focusing more on a premium products. If you can go and see in the later lower bottom of the side, like in cup stock bottom, the growth has been 75%, stiffener 41%. So again, they are focusing more over the specialized products where margins can be higher. So now if we connect the dots, they have spent around 500 crore in last 3 years. So that should aid to margin expansion when the cycle turns, when pricing power improves. So we are getting all the right kickers or triggers to assess this company and understand these companies, this company is focusing on the right direction. If cycle turns around, this could be one of the good beneficiaries. Now let's move to the next slide. Yeah. So now just look at the investment case. So as we all know, in 2019, Andhra Paper is acquired by West Coast Paper. And as we know, West Coast Paper is a market leader. So just look at the investment side of the balance sheet. It has increased from 16 crore to the peak of around 1000 crore, and still around 900 crores are there. So that's the type, like we can merge it to the supernormal cycle that went from 2021 to 23. Even in the PNL, you can look at the 2023 margins was somewhere around 35%. Again, as an investor, we should not expect margins to go to that level. But we can safely assume 8% is also not sustainable, the current margin or the TTM margin for Andhra Paper is. So it should lie somewhere between 10-year operating profit margin, which is somewhere around 20%. Eh, So they have around 900 crore of investment on the books, currently trading at around 1500 crore market cap. So adjusted for investment or the cash that they have, it's only trading around at 600 crore. And available at a book price to book of 0.78. Again, if you look at the larger players with integrated play, I don't think any other company is available at below our valuation on price to book than Andhra Paper. Right? Even JK is around 1.2, and the price to book moved from zero point 0.7 to 2. In the bad cycle, it remains around zero point 0.7. In a good cycle, it can move to 2. Right? And Andhra Paper historical things would not be much relevant. We should compare it more with West Coast because that's the ideal range. Because in the past, Andhra Paper was not managed efficiently. And again, the tissue paper capacity is also coming live next year. So that should at least add around 300 crore margin in tissue paper. As I have checked on internet, should be around 15 to 20% conservatively. Right. So all in all, if you look at, I don't think there is much more there to lose if someone has a 2 to 3 years of origin. Right. All the triggers that we want to look in a company or in a cyclical company are present. When the pricing improves, margins goes higher, operating leverage kicks in. Again, there could be a just we can do the maths of around maybe what could be the FY27 numbers. So it could be somewhere around 2000 crore of sales with 15% operating margin. Now you can calculate the EV/EBITDA that you can get. So 15% would be somewhere around 350 crore. Yeah. So and it's currently trading at around 1500 crore of market cap. So yeah, that's the basic rough calculation that we can do. So that's all for Andhra Paper.
Yep. Thank you so much, Manthan. Really nicely explained. And yeah, it's just really nicely put everything together. Um, so let's move on to the next one. So what we're doing is we're doing something kind of different and special. We have Chiranjeev sir. I've asked to unmute you. Hopefully you can hear us, sir.
Yeah, thank you, thank you.
Yeah. So Chiranjeev sir is where do I even start? He's a member of GIC. He's the youngest youngest person in our group,
Awesome.
energy wise, and would love to kind of hear from him from one of his investments on a company called Pakka. And so yeah, sir, do you want to share your screen? Would that be okay?
Yeah, sure, sure.
I'll,
Yeah, thank you, Rahul. So just let me know if my screen is visible.
yes, now it is. Yeah.
Yeah, just 1 minute. I'm just managing this thing. Okay, first and foremost, one thing is very important for this thing. The story has played out. Just on this thing is coming. This is something which I mentioned, Rahul, in one of our discussion, one-to-one discussions. So that's what he's told me to, I know, to share about this thing. So this is something which has played out. To give you a perspective that how it started, I entered this company in middle of 2022. How I got interested was I was looking into this thing because at that time this food delivery business was booming, and they were making the compostable molded products. These products were gaining a lot of attraction. Okay, and Chuck brand, many of you would have heard. So this was the brand which was coming up quite clearly, and this was my thesis was that if Chuck, this category is coming up, and they have built a brand, Rest of the players, they were not having brand power. So it was a bit of catchy brand. Chuck itself is something which you can connect easily. So they can get a first mover advantage. So that was my thesis, one of the theses over there. One thing which I liked, that promoter, they're quite humble. Their humility is impressive. And Ved Prakash was basically second gen person over there. His father started the company, and their integrity, it is quite impressive. So that is which was part of the thesis put up over there. Another key story which was developing and which was not priced in by the market. They were in between the lines. It was very clearly written that we are working on that if we can use recycled paper in flexible packaging. Just to give you an idea, there's a company, they are making this compostable molded products, and even brown paper which we use normally, brown paper from bagasse, which is byproduct from the sugar industry. Bagasse was being used. So this factory is in Ayodhya, and they were getting a lot of bagasse in that area. I entered around 78 rupees. It was a small company, and recycled paper, as I said, that was not priced in less than 8 PE. And then key thing is that whole story unfolded. So I kept on holding the company. While holding, my thesis was that promoter pledge was released. There was some pledged shares over there. The thing. So when I looked into the promoter quality and their pledge, so it was not something which was bothering me at that point of time, because and promoter product pledge got released. Market gave it benefit, and it was very shareholder friendly. And this is what company which I respect them a lot. They were one of the first one who started video call. They are posting everything on their still on their YouTube channel, all the video calls which are there. So also, this is one of the company which they don't give a limit to the shareholders that are we have 45 minutes or 50 minutes kind of cut off. They normally they don't end the meeting till the time last question is answered. And NSC listing came up. They had expansion plans. Key thing which was there, this flexible packaging. This is still an I would say this is an area where I keep interest, because I studied this area quite a lot, and that's what which made a difference. And I'm still I would say observer on this particular area. You see what they said, that this recycled paper which they manufacture from bagasse, this their point was that it can be used in flexible packaging for food products. Just so this is something which I picked up from their annual report only. Pakka has emerged as a global disruptor. Just imagine this flexible packaging. It's a big industry, billions of dollar industry. So all Maggi noodles or all chips, Lay's chips, whatsoever we eat. So this is the flexible packaging which is there. Instead of that plastic, if we start using paper over there, this would have been a game changer. And Pakka, they were investing a lot of time, energy into this, which is there. So one thing I will share with you, the thing, my position in the company, that how it got enlarged also because of my conviction with the management quality and the thesis. But I kept on holding, there were a lot of antithesis also kept on coming, and I was keeping all the notes of that. There was no focus on brand building. In one of the con calls, I mentioned them that why don't you look into when you don't you invest more into your Chuck brand building? Just imagine now today had somebody some restaurant says, upmarket restaurant says that I will deliver you through Zomato and Swiggy through compostable product. It will be there environment friendly. As Rahul said that his wife doesn't allow him to take slip. Then many people, many consumer, upmarket consumer would have gone because of this Chuck brand. That was basically my push to the company, but they didn't put up their evaluation. They said that we shall look into that, but nothing was done. And then there was a lot of perception which was getting built on success of flexible packaging. So perception of the market was much higher than what company was actually doing. Then I did a lot of groundwork, and I understood that there are established players like Cosmo Films. They're also working quite hard on this thing, paper-based flexible packaging. Just to give you a perspective, today also there are Pakka is also doing. There are a lot of companies they are doing that they are preparing this flexible packaging based paper based flexible packaging. Outer side you get a total feel, touch and feel of paper. Inside still there is a poly layer, because that's what will be the sealing layer and the barrier layer. So there are two inner non paper layers. Top, which is giving touch and feel, that is paper. Then there is a barrier layer, which is again plastic, and then there is inner side sealing layer, which is LDPE, which gives you sealing quality. Okay, so that is something which is there, that it's not only that they are a global disruptor, other established players who are already there in flexible packaging business, so they are also coming. And then they were doing a lot of geographical expansion, so there was a risk of focus loss. They made the structure a bit complicated, which is still so. So different division having different CEOs. Again, Ved Marwa, he was sitting in US, and he was not basically coming to the day-to-day working of the company. And at the same time, by the time one chocolate company, Bombay-based small player, they adopted a Pakka's this thing paper-based packaging. But and when my channel checked, said that it's around minimum 30% costly than the other poly packaging. Okay, so I exited there on 8th of February. This is very interesting. What happened was I entered somewhere over. So as I don't know about you, but with me, it happens whenever I enter, the stock price comes down. So it came down. So I added more because my conviction was high. So I had sizable. It turned out around 7-8% of my portfolio. And luck favored. So it was Ayodhya based. There was a news when this Ram Mandir came in January. This thing, there was news that they have got order from Ram Mandir authorities to pack their prasad in their packaging. So that was the news, that market gives us total salute. So that is which is there. Why I said the 8th of February? Because 7th of February their con call happened, and there I learned this thing, that their order was quite small. It was this thing, because relatively small against their volumes. So it is only 3 or 4 days of this thing, their run. Production run of their parent factory, which is in Ajodhya. So expanded this total capacity of the company. It was not a needle mover. And secondly, this main during that time you would recollect that main. And this is something to be watched in paper companies, because paper companies, when as Rahul said in the beginning, their terminal value is zero, so they hold quite sizable land bank. Okay, so there was basically perception of the market that this land bank will be used, some old hotel can come, etc. So then my channel checks, they suggested that it is not something which is will be used for this kind of a commercial purpose. So it is there, but it is basically locked value. So immediately next day, then the call, I exited fully. I exited somewhere around 350. So ultimately, so that was my this thing, that and in the meantime, one thing which is quite which happened, that this total theory that they were making this compostable molded kitchenware. So this commoditization of this total industry happened. There are a lot of, nowadays there are turnkey projects, which was basically moat for the Pakka. That moat got destroyed. That there are turnkey projects available. If anybody, you and me, want to put up a project, these are a company where they put up whole machinery for you, and for you is just to organize raw material and start making this product. So, and the moat, which opportunity which Pakka had for Chuck, that is something which they lost. And Another thing which has happened during that time, if you remember, that there was a ESG theme which came. Because of ESG theme, there was a lot of pressure on companies, and every company, particularly multinational, they were coming up with their plans that we will be net zero by 2030,
Yeah.
2035, or 2040. Shorter the thing, it was becoming bit quite fashionable. Every even countries was putting up their thing. So by this time, by as we enter in 2024, this was losing steam. Okay, so because this total theme, you would know this total story of what happened with ITC, that was losing its stream, and because of Yodhia's story, market was giving a crazy valuation to that. That's why I exited this thing. That's what I shared with Rahul. And
Yeah.
there, key thing, there are a lot of learnings which you can see on screen, which are there. One point which I would like to put up here, in the context of paper, I would say that if any player can crack this cost part of it, because packaging is a food industry, packaging is a big chunk of expense statement, as FMCG margins are getting narrower and narrower. If and still you have a paper story. If anybody can crack the cost, it will be a game changer. So that is something which is the opportunity still lies. So that was the basically case study which I would like to share, uh, if it adds value.
Wonderful. Thank you so much, sir. And yeah,
Thank you.
I
Always
personally I
welcome.
listen very closely to whatever Charanjeev sir has to say because just he's just so nuanced with everything he does. It's it's almost like art, very beautiful to watch him build investment cases, and we get to learn a lot from him as members of GIC. And this was, yeah, thank you so much
Thank
for
you. Thank
sharing.
you, Dharal. Thank you.
Okay, so next we have Shashank Bhai. He's going to share on Satya Industries. Shashank Bhai, you're already familiar with. He's also another great member of our small community. So, Shashank Bhai, you want to share your screen?
Yeah, I will share screen. 1 minute. There is an issue with sharing.
So far, we have 58 members here. Um, how are you finding it so far? Are you getting any aha moments? Are you learning? Um, if yes, just give a thumbs up or yes. So just so that we know you're still awake, you're with us. uh, 59 members. Okay. Yeah. So again, requesting you to be, a bit more responsive. Let's not just make it a one-way conversation. As it is, paper is very boring. यार आप कुछ बोलोगे नहीं तो और भी दिक्कत हो जाएगी. So yeah. So if you're finding this valuable, just give a thumbs up. Would love to kind of know your thoughts. Perfect. And we're also moving towards Q&A, which is where we can have even more interaction. We are going to take every single question. And so, yeah, rest assured, if you have any questions, please note them down. And make sure to check out the cement sector link because that's live only until the workshop lasts. And that should be very exciting also. So, Shashank, we're good?
Yeah, 1 minute. Were you able to see the screen in
Yeah,
between?
yeah, yeah. दिख रही है, yes.
Can you see the screen now?
Yes.
Okay, great. So intro we are already done with. So I'll start with Satya. So just before we begin, quick background. So it is one of those players, which manufactures paper using the agro residue route, right? So one of the three archetypes that we discussed. So Satya belongs to the archetype of agro waste players. So quickly, why Satya? What got me interested? I think we've spoken about this in a lot of detail, but like, yeah, this was what. So you know, 20% return on capital over a 10-year period. Come taking into account all cycles, PAT growth of 28% and revenue growth of 13%. It is also the lowest cost producer, one of the lowest cost producers, the lowest in its category, with a moat that is getting deeper. We will discuss about that. It's gaining market share, and there is supply side consolidation. And promoters are credible, they have a consistent track record. So, looking at this, if I don't tell you the sector, if I ask you, if I show you this slide, what is the multiple that you would ascribe to this business? Probably your answer will be higher than, I don't know what your answer will be, but I'm curious to know. In fact, it would be good if you could share your answer if you knew just this about the business.
Yeah. So the question is that what multiple would you assign, right? If you knew just this, return on capital 20%, PAT CAGR 28%, revenue 13%. So please, would love to hear what you think. This should be 5p, 100p, all options somewhere in between. Sushant bhai, one request. Is it
Hmm.
possible to increase the size of your presentation?
Yeah, 1 minute.
Yeah. Because right now we are seeing two. Huh.
Is it better?
Yeah.
Okay. Um, yeah. So curious to know, what kind of multiple does this business
So
deserve?
Svetaranyam ji says 20p, Sagar says 35 to 40, U Prabhu says 25, Charanjeev Kohli sir says 25, 18 to 22, Rushil 25. So yeah, a whole range of
Yeah.
multiples.
So okay, but what we found was the price to earnings. So this was I made this in July. More or less, the data would be similar, but there and thereabouts, right? So trailing multiple was 6.7. On a cash base, there's a large depreciation element in the PAT. So if you do it on cash profits, it's 3 times. Market cap is 30% of replacement value. So if you were to set up this plant all over again, you set up a new plant like this, it would cost at least 2,500 crores on a market cap of 800 crores. And for reasons that we've discussed before, it's a boring industry, it's a dying industry. Nobody's interested. Everybody wants to make chips, everybody wants to do like AI, sci-fi stuff. There are not a lot of people who are going to get into this anyway, right? And one insight that we got visiting the management was even players who've been doing this for 25, 30 years successfully, they are also very scared of greenfield capex, which was very good news for us
Yeah.
because they are so scared about government regulation and the kind of procedural issues that there are. They don't want to they don't want to easily do that.
Yeah.
And on top of that, based on what we know in terms of the initiatives that they're taking, purely from a business growth perspective, with the PAT growth should be about 20 to 25%. This is not factoring in any improvement in margins or change in the market context. So this is what got us interested. Okay, I think we can skip this. Um, about the market. So, like we've discussed, so right, there are basically four segments. They play in the overall market is 10 to 12 billion dollars. They play in the writing and printing segment, which is not the biggest or the fastest growing one, but this is the one which is really consolidating fast. And vertically integrated players have a meaningful difference in cost structure compared to other players. In my mind, the jury's out. In my mind, this is probably the best sector to play in. Okay, so in terms of how they have evolved, so it was a very small company, driven by a completely promoters initiative. So they started from 5,000 tons annual capacity to what 2,40,000 tons today. So, then they focused on vertical integration and lowering the cost structure, and then, they've been doing cost reduction capex from 2015 to 21. And 21 to 25 was the phase when they focused on increasing like the throughput. They doubled the capacity. 25 onwards is again the period where we'll see 25 to 27, 28 is where we'll see focus on cost reduction and some increase in capacity, but not a meaningful whole hog focus on capacity increase. So today it's one of the largest in the writing printing segment with a fully integrated plant. They have about 2 lakh tons of capacity with 4 machines. They're located in Punjab. This is important because it gives them unique advantages as far as their raw material sourcing is concerned, because they are into agro, they are an agro-based mill, and they sit in the wheat and the rice belt of the country, so they are able to procure raw materials much more easily and at a lower cost as compared to competition. Um, so they have 100% in-house power generation. They have a chemical recovery plant and one of the best effluent treatment plants, and they are also a proud zero discharge company. Uh, Run by promoters, who I would say, in a way, Dr. Sethi is a force of nature. He's like built this bottoms up without any experts, etc. He's figured his way out and built this business. So today it's about 1,500 crore market cap, give or take a few hundred crores based on pricing changes. Market cap is 800 crores. Promoter holds 52%. This is interesting. So I think two messages I want to land here. One, the scale of the business has evolved quite a lot. The scale, as you can see, from 15 to 25, they've grown revenues at 13%. PAT has grown at 28%. What is also striking is, it is a cyclical business, no doubt, but the perception of cyclicality that we have, that needs to be calibrated. If you see the operating margin variance here, the highest has been 12. There has been no year where they've been like losing money on a PAT basis or on a operating margin basis, and the highest has been 24%, which was March 24. Um, and March 25, 24 to 25 is when it was like mayhem in the market. Mills were shutting down, they were losing business, and Satya was still, they did a PAT of 119 crores. So yeah, so essentially this illustrates the point that they have industry leading cost structure. Even when others are bleeding, they're still able to make money. Okay, moving on. So yeah, it's the lowest cost producer. There are multiple reasons for that. One is the vertical integration of the mill, and this is why we've been harping on the point that there are certain mills who've crossed that threshold, who've kind of done that journey, and it's not uh, like Satya in 2015 was different than Satya what it is today. They are much more solid, they are much more planted, and they have much deeper competitive advantages today. Then raw material sourcing on agro. The agro residue that they are buying, that's 3 rupees a kg. So there is a lot of freight cost involved. Sorry, 32 rupees a kg. So there's a lot of freight cost involved. Um, and that being in close proximity, that really helps. Yeah, so essentially, this is a process industry, to say it in a very simple fashion. So there are multiple steps in the process, and that lends itself to opportunities of optimization through the value chain. So I have a close relative who runs a similar paper mill. So he says that there are no dearth of opportunities to optimize cost in our business, right? So given this is an extensive process, so the opportunities keep existing, and that is what really differentiates the best in class with the run of the mill players. Now this is interesting. Again, harping on the same point of scale and cost reduction. So if you see the gross block over time, so from 358 crores to 1,500 crores today. This has been backed by real cash flows because if you see the borrowings, they've actually gone down. They are low, like despite the huge investments, they've gone down. And as Charlie Munger says, the man who needs new machine tools and hasn't bought it is already paying for it. So the competition is suffering, and they are in no mood to stop. So they have planned capex of 450 crores in the next 2 to 3 years with payback periods of 2 to 3 years. So this creates a flywheel effect. I think all of us intuitively understand this. This is this is hard to break, and once it's going, you only get better and better, and the players who are losing out, they eventually perish. So as Warren Buffett says, when you're selling a commodity like uh, product, then being the lowest cost producer is all important. And I think they understand that well, and they've been executing on this. Going forward, there are multiple initiatives that they have lined up. There is a plant upgradation, which will lead to increase in production capacity, reduction in cost. There is a new soda recovery boiler. There is a change in grade mix due to the upgraded machinery, etc. And net, I think we should be able to see earnings growth of 20-25% in the next 3 years because of all these initiatives. So, yeah, this is where we are. So, where would the business be in 3 years? Probably, yes, growing EPS by 25-26%. Debt should have gone down, and lowest cost producer by a mile, and the moat again gets deeper. Um, Key risks. So one thing is, I wanted to cover this slide as well. Why then, if everything is so good, why the discount? Are we missing something? We could be, for all you know. But the way we see it, the downside risk is almost negligible, while there is an upside to be had. And secondly, these situations of mispricing is typically what leads you to outcomes that are extraordinary, and it's a non-consensus buy for sure. So I think we've talked about this earlier in terms of paper is a dying industry while there is significant headroom. This is a cyclical industry, sure, but it's not that crazy. The operating margin variance is 12 to 24%. And then the third point, I think this is interesting. It's a commodity business. There is no moat, but I think we need to have like a second level understanding here. The moat comes from cost leadership and not pricing power. Every business is different. Not everybody is a FMCG company. So to say that there is no moat, I wouldn't agree. Other reasons to our advantage, yeah, it's not a sexy business. There is no AI, EV, there is no helicopters, drones, etc. So market is too busy looking at other themes. So yeah, these are scenarios. Again, I would not fixate too much on this. Then risks, there are multiple risks. I think the heaviest one is obviously the key man risk. The promoter is all important here, and there is a potential succession plan also that needs to be figured out in the company. And yeah, that's it.
I think you've set too high a standard for case studies, yeah. Anybody who comes after you is going to suffer, which is me. So yeah, it's uh, just, I mean, so beautifully explained. Thank you so much. And you've covered pretty much everything in a very nuanced and simple way at the same time. So thank you so much, Shashank bhai. And yeah, like I was earlier saying, Shashank bhai has been the key instrumental person behind, our all of our understanding on paper sector. And so yeah, that was really, really nicely done. Thank you. Okay, we have one more case study for today, which is JK Paper. Sorry, we have NR Agarwal also. Um, we are at 1 o'clock, and so let's see how to kind of squeeze that in. What I'll do is I'll share my screen now. So Um, yeah, if you liked, the way Shashank Bhai has been presenting, other members have been presenting, just let us know, give us a thumbs up. Uh, yeah, awesome. So I'm sharing my screen. Please let me know if the screen is visible. Yeah, is the screen visible? Can you, yes, no? Yeah, is the screen visible? Can you please type? Okay, perfect. Right. Right. So, the case study I'll be presenting is on JK Paper. It's the market leader. In the copier paper segment, it has around 28-30% market share. Uh, so yeah, it's a very, very high quality company. Another great thing about JK Paper is that it has a it's a part of a larger group, and our understanding of the group is that they're very ROI focused, and these are quite tightly run ships. So they also have JK Lakshmi, so they know how to run these commodity types of businesses. And another important aspect of having a strong parentage is that you have uh, liquidity, and you have all of that available in times of need. Not that JK Paper needs any of that given the current situation they're in, but yeah, it's good to know. So capacity is close to around 8 lakh metric tons, million tons of capacity. They have, three key units. We've outlined them here. So pulp 150,000 tons per annum, paper itna hai, packaging board itna hai. Similarly for Sirpur, which is here, and the third unit. So combined, these figures are this was in January 2025. So this has now increased to close to 8 lakh tons. This is a more uh, updated figure, right? And like I said, it has a strong parentage. Okay. Now, one thing to bear in mind, one of the key shifts that is happening for JK Paper is that they are shifting towards packaging boards, right? Packaging was 19.4% in FY21 in the overall capacity. This is, by the way, capacity in terms of capacity, and today it is 38.4 in FY24, and according to the annual report, it's around 41% now. So clearly, there is a shift in towards packaging, and given what we have discussed previously, where we shared how packaging is growing at, I think it was 8 to 10%. Certain segments was growing at 12%. So it's no wonder why JK Paper is also moving towards that, right? So even in terms of volume growth, the total sales, there's been a significant, actually a very healthy growth. Despite that, at least in the last 2-3 years, we've seen that revenue has not increased for the reasons we discussed, right? EBITDA per ton was 11,000 uh, in 2021, excuse me, and it increased all the way to 25,000 2023, and now is back to 11,500, right? So clearly the industry is in a downturn again and again. We know that. So no brownie points for that, but just to show you the trend over the last 5 years. And to add to this trend, the increase in packaging boards from FY21 to 25, a lot of that has come from acquisitions. And this is very important because if you want to be with a player in the paper sector where large amounts of consolidation is happening, and as you know, a lot of the smaller mills, they are not able to compete, so they get taken over. So you really need a player that can do these acquisitions, larger and larger acquisitions, and do them well. And JK Paper, in my opinion at least, fits the bill very well. Uh, the huge amount of the change in mix from packaging from uncoated and coated paper, which used to make majority just in FY21, to move rapidly away from that is, thanks to their many acquisitions. And the most recent one is this Borkar Packaging Limited. This is a company that has around 380 crores of revenue right now. So the why this becomes important is because in the next section, um, maybe not this slide, but the next slide, I want to kind of run through what's possible. So yeah, we'll get to that. But so yeah, shift towards packaging is the key trend. If you look at the last 10 years of operating margins, clearly FY20, sorry, 2014 was a low year. And sorry, let me just, one second, sorry. Yeah. So 2014 was obviously a low year. And again, while we are not at 8%, we are at 13%, 14 to 13%. And in my humble opinion, I think the new low is, uh, this 13, 14%. The reason why at the bottom of the cycle in 2014 it was at 8%, today it's 13%, is because, as we mentioned, there have been significant changes in operating efficiencies in terms of scale, in terms of, how much water is used, in terms of power usage. All of that has significantly changed over the years. And JK Paper is it's a market leader, and it's a quite a strong competitive position. Return on capital has varied significantly. Today it's at 9%. Uh, it's hard to argue that it would stay at 9%, forever from here, which is what the case is. The investment case, if we talk about it, similar to Satya, similar to, Andhra Paper, the entire sector is at some sort of, if not the exact bottom, close to the bottom, on the verge of recovery. It is somewhere in that phase where, at least in my opinion, it's trending towards improvement. However, one thing I want to also point out is that, at least in my investment experience, since 2014, most of the times what we expect, and please do let me know in the comment section if you also feel that way, that what we expect and what the reality is, in terms of the timelines, they are always, the things always take much longer than what you expect for them to play out, right? I don't know why that is. Maybe because we are an optimistic bunch. Maybe our desire to make money clouds our judgment. Maybe uh, the world is uncertain and all of that. But if you've also felt that, and this has happened with me in multiple cases, I've also observed it in the case of other investors, great investors also, where the timelines are a little extended. So if you've also felt that, let me know in the comment section. At least I'll know I'm not the only crazy one. So in terms of net profit after tax, we were at 56 crores. And, we were at 1196 in 23. We're down to 410 crores, right? So significant decline. We also already saw that from 3,500 crores on an industry level PAT came to 1168, right? So a very, very sharp decline. And obviously, because JK Paper is a major player, the same trend has played out over here also. Cash from operations have been positive, and no problem over there. The cash conversion is also healthy, 4,900 crores of total net profit, and we're getting a cash flow from operations of 8,000 crores, right? So CFO to PAT conversion is higher than 100%, which is always nice to see. CapEx, out of the 7,900 crores, 5,300 has been spent on CapEx. I think a significant amount has already also been spent on acquisitions, which it seems they are, they've done a decent job at capital allocation. So there is decent amounts of free cash flow also, which was kind of surprising to me. Again, as I'm digging more and more, there are more surprises, because a paper company generating decent amounts of free cash flow is quite nice, right? Um, yeah, so on top here we have sales growth. Again, I think this point has been beaten. Uh, it's been said a lot, but yeah, there was just 2 3 years where good growth, and now we're not seeing a lot of revenue growth, right? This is revenue growth, by the way. The point of this chart, actually, this is probably the most important chart for me, at least, from the perspective of this workshop, because इसमें हमको ये पता चलता है, मतलब the idea is ये पता करना कि what happens if even a small change in either the cost side or the revenue happens, what is that change on the bottom line? And because these are high fixed cost businesses, very small minor changes can lead to significant outsized bottom line growths. Similar to what Sushant bhai just showed us with Satya, you remember he said, I think the revenue growth will not be more than 5 to 6%. Correct me if I'm wrong, Sushant bhai, but that's the figure you gave. And he said that EBITDA margins will expand, and combined with 5 to 6% of revenue and EBITDA expansion, you're going to see, significant amounts of uh, PAT growth, right? So I just want to test this. यहाँ पे ये FY25 का नंबर है 6,718 crores, and this first case is where I'm assuming that everything is the same, right? More or less everything. I'll go line by line and explain. But I'm assuming that just 2% the raw material comes down. Just 2%. I think it's a very possible scenario to play out where raw material could come down by just 2%. So in FY26, nothing changes, just raw material coming down by 2%. So that's the major uh, kind of thing that we are testing for, right? Uh, if that is the case, your gross profit margin goes up by 1.5%. So nothing too exciting here. But as we move down, uh, the total income ये तो same ही रहेगा. Everything else remains the same. I've even factored in for an increase in employee cost by around 5%, right? Because यूनियन बाजी चलती है अभी मार्च में इनका फिर से कुछ टाइम के लिए यूनियन ने बंद करा दिया फैक्ट्री. So I said, okay, fine. Let's assume that employee benefits also increase, right? Everything else remains the same. For just 2% reduction in raw material, by and large, everything remaining same, your profit after tax grows by 10%, right? So a 5x. Okay. Now imagine a scenario either in FY26 or longer. What happens if our top line also happens to grow by 5%, right? Along with the reduction of 2% in the raw material, right? It is highly plausible. I would not say मतलब ये हो ही नहीं सकता. It's a very it's not unreasonable, right? And 5% तो मैं मतलब अभी जैसे मैंने बताया 383 crores, sorry I don't want to write here, 383 crores का जो रेवेन्यू है वो तो जो लेटेस्ट एक्विजिशन है जुलाई 2025 में जो उन्होंने अनाउंस किया है उसी से आ रहा है, राइट? ऑफ कोर्स दिस इज पैकेजिंग, it might 1 year it might take to get the unit to what they can do best with it to maximize their efficiency. But I'm saying at least on a top line 5% without anything else, uh, it is a very possible likelihood, and 2% reduction in raw material is also possible given that now we're going to see increasing plantations coming on board. If that scenario plays out, you have 42.5% gross profit margin and improvement of around 3%. And if everything else remains the same, your EBITDA margin goes to 19.4% and your PAT grows by 48%, right? Uh, I think that's pretty much the entire story, and that's it. That's the key insight, at least for me, that even minor amounts of growth on top line can lead to an outsized bottom line growth. Now, whether it's 48%, honestly, I'm not expecting 48%. मैं तो कह रहा हूँ 20% भी हो जाए, 25% भी हो जाए. For a company like JK Paper to grow their PAT year on year at 25%, given the scenario we're in, given the valuations where the market is, uh, I don't know. It seems quite interesting. And to give you a full disclaimer, I am invested in it, so I might be biased. I would urge you to question this thesis. So yeah, to give you a sense of the valuation, it went to I think 0.6, 0.7 in COVID. I would use that as a minimum or the bottom that it can go to. and currently it's around 1.2. It was down to 0.9, and this was luckily this was exactly the time, March 25 or May 25, around that. This was when, I wrote an article on JK paper. So, by the way, because we are restricted, we cannot actually invest in companies we're writing on for obvious reasons. Uh, yeah, I bought into JK Paper much later, more than 2-3 months later. During that time, price has run up, but I think the value still remains, in my humble opinion. And again, the idea is not to tell you what I am doing or whatever. The idea is to give you the reasoning, and you guys can kind of use this for your own research if it helps. Uh, so yeah, that's pretty much it from my side uh, on the case study. Now we do have one more case study, NR Agarwal, but we are also well into the workshop. We are 2.5 hours into it, and we because we want to focus on the um, Q&A. Maybe Sushant bhai, can we kind of run through NR Agarwal because such an interesting case. I also don't want to miss out. And then as soon as we are done, we're getting to Q&A. So let's do that. Yeah, 1 second. I'm asking to unmute. Yeah.
Yeah. Sure, we can do that. I think let's quickly run through it in 5 minutes in the interest of time.
Yeah.
If you could flip the pages, Rahul, since you have the
Yeah. Yeah.
screen.
I'll do that.
Yeah. So NR Agarwal, at least for me, is exciting. Why? For a couple of reasons. One is so in terms of archetypes, when you think of it, it is one of those players which makes paper from waste paper, right? And or scrap paper. And in terms of the end product, so they are into duplex boards and writing and printing with production units in Gujarat. Um, and they have they are proximate to the port, which is very essential for a writing and printing player because sorry, for a recycled player, because a lot of the raw material is imported, so you don't have to pay the inland freight. And the end market, it is a lot in West India, so western side of India. So in terms of location, etc., they are pretty well placed. For me, what has been very interesting is this whole shift from, they realize that writing and printing is not a sector segment that is working for them. And it again reiterates our point of, how writing and printing is a completely different beast altogether in terms of vertical integration and scale, etc. So they realized they were spreading themselves too thin. They're focusing on the packaging board paper only. And they've taken some bold calls of selling out a unit to Ajit paper, which Rahul was earlier mentioning about, and then they've also done a closure of an old unit, a legacy unit, which is not profitable. So today the mix has shifted quite a lot towards packaging board paper. Yeah, let's move on.
Yeah.
Next slide.
Next slide.
Yeah.
Okay.
So. hmm. So they've done this crazy capex recently, which has gone live. They did a large capex of around 900 crores, where they've set up this new state-of-the-art paperboard machine. And when you thought that was over, they've decided to set up another one, which is quite crazy. So they've not the previous. So just for context, the market cap is 600 crores. There is significant debt on the books. And the previous one was also debt funded. Now that's come on stream. It's getting utilized well, which is a good thing. Margins are at a cyclical low, but they have the guts to go for a large capex for 1200 crores, which is uncomfortable for this balance sheet. But you can't fault the vision. Maybe the timing of it. I mean, like honestly, I can't be that bold as a promoter, but I really appreciate people who have that kind of a thinking. So it could cut both ways. It's a risky bet. Uh, the way I would say is the best way to look at it is probably keep it in a tracking zone. Probably it's not a in the anyways, it's there are no buy sell recommendations, but I'm telling you the framework I would apply. So given this 1200 crores will be again debt funded, so there is going to be significant push on the balance sheet. Once this comes live, there'll be a large line of depreciation, large line of interest. The numbers will not look all that great initially, so but you know, it might be good to kind of look at in a few years probably. That's the way I would look at it.
So, sorry to interject, but this 1200 crores of capex would also be in phases, right? It will not be on day
Yeah,
one. So, some part of it will be met through internal accruals, or they've said ki pura ka pura debt.
internal accruals should actually go in paring down existing debt.
Yeah.
But yeah, some part of it will be from internal accruals, but I think a large part of it will come from debt. And you're right, it's not going to happen in one shot. It will happen over 4 years. But I think till the time this is out of the way,
Yeah.
the balance sheet will remain stretched. I don't think they've reached peak debt right now. Otherwise, it would have been interesting, right? Like capex large capex is finished,
Yeah.
like deleveraging cycle, operating leverage cycle, good time and margins at a cyclical low, good time to really look at players who could benefit from improvement in pricing. But I think this investment engine will keep going on, which if they pull it off, honestly, I think it'll put them into a very interesting
Yeah.
orbit, because the struggle in the boards paper segment is also, it's even more commoditized. There are a lot
Yeah.
of
Yeah.
fragmented small players who are there, and they've mentioned this in their con calls, in their annual reports repeatedly. You know, they are looking at scale, they're looking at cost advantages, and they want to be the lowest cost producer. So if they're able to do it, I'm sure they'll be the lowest cost producer in India by far, which is a good place to be.
Hmm.
And it could get pretty interesting. The margins could remain protected over the long term after all this is out of the way.
Very interesting. Perfect.
Yeah, yeah. So few things to look out for in terms of leverage and pledge and other things. Yeah,
Great.
over to you, Ralbhai.
Uh, Perfect. So I think we are done with the case studies as such. What we would like to move on to is the Q&A, right? And so yeah, let's open up the Q&A. Please feel free to post your questions. And meanwhile, I'll be a little shameless and remind you that we have a session on cement next week. So yeah, while you're in the session, like we said. Uh, Q&A, any questions you have, please let us know in the um, comments, and we'll take each and every question that we have. Okay. Navneet Mukherjee, sir, thank you so much. You've been constant with us, and thank you for being so supportive. Really appreciate your presence. His question is, what are the projections of management out of that 1200 crores capex
Yeah,
revenue?
so I don't think, happy to stand corrected, but I don't think the management has given a guidance. But typically, you should assume that 1200 crores would be about 1500 crores in revenue, about 20% margin. So about 240 crores is what they should make on a 1200 crore capex. Uh,
Hmm.
but again, subject to market conditions, etc. But on a normalized basis, that's what you should make.
Right. Next question is from Deep Shah. I think you posted the question earlier. Sorry, didn't get answered
Yeah.
earlier. What is the thumb rule for capex for setting up 100,000 tons of capacity, brownfield, greenfield?
So, um, I'm not sure. Like, again, multiple nuances. Again, depends on the process. For example, I know Satya closely from a agro mill perspective. I think 100 Greenfield, brownfield, I think is tricky. We should not even get there because sometimes there are debottlenecking things, etc. You could increase capacity with, but greenfield, 1 lakh tons would be about 1,200 1,300 crores easily. And greenfield would take 3 4 years to set up, multiple regulatory approvals, permissions, etc.
So huge capital guzzler the
Yeah.
industry is. Yeah. Shreyansh Ratan, his question is, Andhra Paper looks extremely interesting. As you said, it is fully integrated. So does it give it any projection from margin pressure? And regarding Satya, how do you interpret promoter salary as a percentage of PAT, which is extremely high? How would you compare it to the industry average? There are basically two questions. Manthan, sorry, yeah. So so we can start off with Andhra. Manthan, you're able to speak?
Yeah, yeah.
Yeah.
So as they are integrated player, it does not gives them the margin pressure because again we need to understand why margin compression is happening. It's basically happening because of the cheap imports, right? If there is a anti-dumping duty, if so, like we should look from this perspective. If Andhra paper bleeds, other writing paper players will die, like the people who have a lower skill than Andhra paper, and that's the advantage for Andhra paper, West Coast, and JK paper, who are big into writing and copier paper type of business. So, and once the pricing improves, the biggest delta of fundings will be in these cases only. But for Andhra paper, what interesting is they have a very strong balance sheet and they are an integrated player. In Tamil Nadu paper, there is a water issue and as well as their balance sheet is also levered. And Andhra paper upcoming capex can be announced in Andhra paper instead of West Coast paper.
Yeah. Yeah, I think the balance sheet part is most interesting. It is super solid right now.
Yeah, and on the valuation front is also very cheap. Like
Yeah,
as we discussed, right, 600 700 crore X investment on the balance sheet. So
right,
even if they want to do an expansion, they can easily pull it off around 2000 crore of expansion.
right. Uh, Perfect. So the next part of the question is uh, for Satya, how do you interpret promoter salary? Because it's kind of high.
Uh, I don't know. I have a slightly different take on this. I think I'm okay with promoters taking salaries as far as they are not fleecing minority shareholders the other way. So I wouldn't worry too much about it, honestly, unless it increases writing. That's already in the earnings, right? Like your PAT is after all the expenses, including management salaries, and I don't know. I personally would not look too much into it. I'm
But
fine.
wouldn't you consider having too high remuneration a form of leasing? At least the very default way of thinking is that, right?
Yeah. So there are 20 ways in which management can actually take out money, especially in businesses like these.
Yeah.
There is no perfect management, and I'm not like, without naming anyone, I'm saying if remuneration is something you really see and then you sign up for that,
Hmm.
I'm better off in that scenario rather than the management taking a very low salary and then
Yeah.
taking out money in other ways, because there you don't know what is the extent and what surprises are in store for you. And secondly, um, in terms of I think the promoter group is pretty sharp and they have a lot of things going for them. Why, given it's a small company, but why should they not take decent market salaries? Yeah, I mean, for the son, it's probably the next generation. I mean, it's hard to justify. But at these valuations, at this price, I wouldn't really
Yeah.
look at those things.
Yeah, I think a lot of those things are already factored into the valuation.
Yeah.
Perfect. Next is your take on JK's diversification to animal healthcare by buying 65% contract. It's I think it's great. I mean, I don't see, actually, to be honest, I don't have a concrete opinion on it other than the fact that, their strategy is to kind of start developing and incubating other businesses. And this is first step. So, I, so far, at least nothing makes me believe this is a bad sign. Even West Coast has a cable division. And if that becomes sizable enough at some point, they might want to demerge it, and that can become an opportunity, sometime down the line. Similarly to JK, uh, please bear in mind JK is a large group that has businesses across the board. So yeah, this could be something interesting. Let's see how it plays out. It's kind of early to say. Hi, Dhruv bhai. His question is how JK's paperboard business fares against ITC's paper business. Will this evolve into a duopoly sort of industry or competitive industry will increase with JK's paperboard business growth? That's a very good question. I think compared to ITC's paper business, there needs to be more work done and how that will play out. But, I'm fairly confident that JK will have a place. In terms of intensity, you're right. I think paper packaging and paper, because it is the only kind of what do you say, optimism on the horizon within the paper segments. So there is enough competition, but yeah, the industry leaders, ITC is a large player, possibly, I mean, possibly the largest, and with JK, these guys should have, they should be able to dominate. But it's a very good question, and I'll come back to you on the ITC angle also. What could be our entry points and exit thesis precisely to bring objectivity around our investment thesis? So, yeah, any of you want to take this, Shushan bhai, Manthan?
My sense would be to look at, probably something like a price to book or a replacement value. Uh, so let's say some companies trading at 30% replacement value is investable. When that goes up to probably 1.5, 2, depending on how things are shaping up. Like, I mean, anything above 2, you should probably get out because it's a commodity business at the end of the day. So that's how you should probably think of it.
Yeah.
Or the other way is probably like, where are we on the margin cycle, earning cycle? Where are we on the valuations? So ideally, you want to get out at good margins, good valuations. Right now, I think we are at low valuations, low margins. That kind of makes a case for getting in.
Yeah, yeah. So this is a very interesting question for me because this is a scenario I've faced with different sectors that I've been interested and invested in. For example, microfinance, for example, paper, for example, cement. You'll see there are wide, it's a spectrum of opportunities from the smaller players to the larger players, and they have different things going on, right? So then the question is, do you go for the smaller players which are kind of or not that well valued, like they seem cheap, or do you go for the companies that are well priced in relatively? So JK Paper at 1.2 is on the higher side. Satya and others at 0.7. I mean, Orion Paper is at 0.4, right? They are fairly cheap. So the way I think about it is बास्केट अप्रोच कर लो अगर इतना दिमाग नहीं लगाना you pick 3 4 companies, one the market leader, one somewhere in the middle of the segment, and one of the smaller wild card kind of hit it out of the park kind of bet, and you allocate equally among them, create an index of your own so that you're not bothered कौन सी company अच्छे करेगी. Other people who are want to go a little bit more into it, they can spend more time. Maybe they want to have one or two companies where they are more focused on. But we have seen that at least initially when the cycle turns, the market leader tends to outperform, and then slowly and so slowly that performance kind of as it shows up in the smaller players, they tend to outperform. But again, this is very case specific, so it's hard to say. Well, yeah, it'll depend on the case, right? So those are the basic two frameworks you can work with. Yeah.
Yeah, one framework that I basically and we basically understand or use is we should look at all the players and look at the margin profiles of all the players into the industry. Even if you look at the Orient paper example, right? They have at the peak of the cycle only made 17% margin, whereas JK paper was making 35 and all the bigger players are above 20%. So that tells you like what's, and then you can dig deep and understand why the margins are lower and is company doing anything to improve on that margins. That if you find the answer is yes, and then there could be the biggest delta of earnings that the rate of change could be much more higher. So again, it's a very case to case basis. And on an industry level, as we have discussed, price to book would be the right metric for paper sector. And when it's below zero point 0.7 or below 1 should get start reading and correlate it with the margin profile. And once the margin into single digit or maybe low double digit, around 12-13%, that could be the good time to get in, which we are today. And maybe sell it off when it's around 25 and price to book is around 2 or 1.8.
Yeah, one thing to bear in mind again is if you're not very familiar with cyclicals, this is not your Warren Buffett kind of bet, at least not for me. Uh, I don't sit across cycles. Uh, so yeah, this cyclicality, the reason why cyclicals are interesting is because in a reasonable amount of time they can give you hopefully a significant delta. So yeah, frame a you have to have an idea when to exit. The next question is from Deep. Century Paper Division was acquired by ITC at 73,000 per ton. Also, what I understand is capacity expansion varies between 50,000, yeah, 50,000 to 150,000 rupees per ton. What is the reason paper companies get low valuation? Uh, I think the biggest reason I can take a shot at it. One reason is that uh, I think it's a capital guzzler. You have to reinvest significant amounts of capital. Uh, so that could be one reason. Secondly, I think it's just not sexy, man. I mean, who if you're doing an MBA, nobody's coming out and saying, I'm going to start a paper company, right? Everybody wants to start drones and everything. And even large, like the Birla Group, uh, Century Group just sold out their paper division. It means that even the large groups don't want to get into this industry. Uh, so I think a combination of all these, uh, low growth, requires a lot of capital. Uh, in some segments, terminal value might be going down. And if you have other alternatives as a group, for example, Birla is getting into paints and everything, cables, paints, all of that. Maybe for them it's a relative call and they want to exit. Uh, yeah,
Yeah, one thing that I could assess is there is pretty low asset turn. So if you are doing 1,000 crore capex,
yeah,
around 400 or 300, you need to spend as a maintenance capex in every couple of year or 3 years.
yeah,
And even after a greenfield capex, the asset turn is usually 1.2, 1.3. And that symbolizes with textile also. And
yeah,
that's where I think the issue lies. And bigger group do not want to spend that smart amount of money because they have the pockets to construct facilities into the upcoming sectors. That could be the one reason why they are selling where asset turn is much more higher.
right. Yeah, actually, thanks for pointing that out. That should have been in one of the slides where I was planning to show the asset turns for different companies across the board. So that would have been interesting. And you're right, asset turns are a problem.
And second part is cost of compliance is also very high in these because again, So why newer player is not coming is also due to regulatory compliance. They need to get the and the control board से जो permission मिलता है, it's not very easy to get.
Yeah.
And yeah, that could be the one more reason. Plus the paperless economy that we are trying to have. But I don't think it's possible. But yeah. And the last part, it does not look fancy.
Yeah. Then that I'm fairly sure about, that point at least. Uh, okay. So throughout the cases, I saw the use of price to book and tonnage based valuation. For industries like cement, EV per ton is a standard metric. Similarly, for paper industry, what would you say is a standard valuation metric? Shashank bhai?
Uh, Sorry if I lost the
Yeah,
question.
I'll repeat the question. Uh, so Shreyansh is saying that throughout the case studies, I'm seeing price to book comparisons, right?
Hmm.
Whereas for uh, heavy industries, uh, capital intensive industries, you have EV per ton or EV by EBITDA, for example. These metrics are used more often or conventionally. So, what do you think is a standard valuation for paper industry?
Uh, Sorry, if you allow me, I have a slightly different take. So a lot of these metrics actually converge. If you take, let's say, EV to EBITDA, you want to take price to earnings, you want to take replacement cost, etc. If something is cheap on one, typically they'll be cheap on all. But if your question is what is the right way to think of it, I would say, the sectors like these probably replacement cost, and second, you should look at you know do a projection of what the earnings could look like in the next 2 3 years, and what's a fair multiple to on a earnings basis also, right? EV to EBITDA, I would graduate for play, use it for players where there is a lot of debt, because PAT can be misleading there. Uh, you, EV per ton is also, you could even use that here, but in paper. But again, it's slightly misleading because mix, etc., varies quite a lot. I would keep it simple. Look at replacement cost. Look at what is the potential earnings 3 4 years out in your investment horizon, and what is a fair multiple for that business to get. Also, I think one thing. At least my 2 cents is when there is a sea change or step change, right? There is a change in perception, and perception also impacts multiple. So given it has not gotten a multiple does not mean it will never get a multiple, and that's the role of variant perception. If you think the business in a very absolute sense is worth a lot more, uh, or there is something that investors are missing. Eventually, everybody is concerned about longevity of growth, and growth continuing. Then, if it happens over time, then multiples will follow.
Perfect. Next is what is that contingent liability of Ryan Paper around 3,000 crores? We'll have to check, yeah. Can't comment on it. It's a very specific question. Yeah, let's be in touch. Xiaomi, if that's your name. But yeah, let's be in touch. Hopefully, you're one of the groups and we can kind of connect on a personal basis. Uh, which is better, investment in pure play companies or companies diversifying into board? What is paper versus board dynamic in terms of ROC asset turns, considering board's margin is lower compared to paper business? I think this is a great question. Yeah. So, I think boards is the way to go. Writing and printing paper, again, we don't know how much longer it will be there. So as market leaders do, JK Paper being one, they are trying to find newer avenues of growth and profitable growth for that matter. With their size and scale, they should be able to make that business profitable. But one of the it is profitable. But one of the concerns I also had was that with the increasing usage or increasing percentage of packaging into the overall mix, how will that impact the overall margins? And so that's why this is a great question, and that's something I'm also closely watching, because if that is the case, you cannot kind of benchmark it to any of the previous year's EBITDA margins when the product mix was entirely different. But we'll see how that plays out. I don't know. Uh, so yeah. Uh, yeah, but this is a great question. I think what is the paper versus board dynamic in terms of asset turns? Yeah, this is something that we can kind of discuss. Navneet sir is saying paperless economy. Maybe another point 0.5 paper companies don't get valuation. He said price to book is okay. Hey, can you briefly discuss replacement cost? Uh, yeah, uh, Shashank bhai, you want to do that?
Yeah, essentially, it is simply the amount of money that you would require to set up that plant, right? Like, if let's say Satya today you wanted to set up a similar setup, uh, it would take you, let's say, 2,500 crores to do that. That in its and I think sometimes we complicate investing. It's more like, if I go to, if in the unlisted space, I go to somebody, I like I have somebody I know who runs a paper mill. If I ask them to sell that mill to me at the valuations at which the market is giving me, he'll throw me out of his office, I know for sure. So, that's also a good sign for me to say that, it's cheap or it's expensive. I I I hope I've answered your question. Is this is what you were alluding to, right? Like, how do you judge replacement cost?
So, yeah, I think that sums it pretty nice. Basically, it means that the same capacity that, say, Satya or JK Paper have at particular, you know, let's just say 100 metric tons, 100 tons per day की capacity, अगर somebody else has to now put, how much would it cost? Uh, and would it be significantly higher than what the existing unit is? So in the case of Satya, that difference is very, very huge. Um, so yeah, that's the idea. Uh, Deep, if I can ask about company specific, what is your view on Shishai Paper? Very healthy balance sheet, and they're going for capex as well. Yeah, I think their balance sheet is super strong. It also stood out to me. Um, but a deeper look is required in terms of, what their numbers can look like 2 years down the line, 3 years down the line, and all of that. But if you look at the balance sheet, it's rock solid. Yeah, it's very, very strong. Namreet sir, NEP could be one of the triggers for paper or WPP. Otherwise, board is the trend. Yeah, rightly said, sir. Perfect. So I think we are coming to the end of this session. We have 30 participants. If you have any questions, please feel free. And also, I want to highlight, let's use this as an opportunity to stay in touch. The whole point is this is not a one-way sort of lecture. We also get to learn a lot. For example, there were some really, really good questions. We'll keep note of that, learn, come back, and uh, get better that way. So. Any other questions if you have, please do share. Otherwise, I think we are we will probably call it a day for today. Yeah, perfect. Virgin pulp paper versus agro-based, which is better? Yeah, I think a blanket answer would be difficult. It's a matter of, again, your raw material price versus your realization. What is that gap and what are your costs? At the end of the day, you have to make money, whether it's your, virgin paper, agro. Uh, it really doesn't matter. Like we have been discussing Satya, that is agro based, and you look at their numbers, you look at their cash flows, it's just really wild. At the same time, there are virgin players also, um, that are doing significantly well and still making healthy CFOs even in this environment. So yeah. Prince has shared a group, so yes, please let's stay in touch. You can join the group. This is the a group where we share whatever we're doing in terms of research, in terms of upcoming workshops. We can connect here for future. Rushil bhai, presentation will be shared. Usually no, uh, we don't, but the video will certainly be shared, and hopefully that should serve the purpose. If you're considering only one cyclical bet in our portfolio, say cement and paper, how can we differentiate sector-wise? How can one differentiate? I think one can differentiate in terms of the delta you can earn, and delta being what are your current valuations versus what the company can achieve. That's one. One can differentiate, in terms of allocation, in terms of how long it'll take something to play out. So if cement is likely to play out in a much more immediate sense, maybe you would have some allocation there. Um, but yeah, so yeah, those are some basic thoughts around that. Thank you, Samir. Deep, thank you so much. Great questions. Let's be in touch. And It was a great session without doubt. Thank you, D. Sorry, I'm not able to pronounce your name. Danish. Yeah. So, yeah, again, thank you so much. If you like this session, please share it on X and please join the group. And hopefully, we will see many of you or most of you in the cement sector next Sunday. I want to take this opportunity to thank people who've taken the time, but also our presenters, starting from Shushan Bhai. Thank you so much. Like I said, you've contributed immensely to our understanding of the sector. Hopefully, we continue to learn from you. Um, and if you are in Gurgaon, please join GIC. We have these physical meetups where you can actually chat with, Shushan Bhai, myself, Charanjeev sir, many other members who are there. Thank you so much, Manthan, for your immense contribution with the Andhra Paper case study and your suggestion. Otherwise, Alpha Wave Ventures is also a Pune-based advisory, and these guys are really really great. I urge you to follow them on Twitter. Any other way you can uh, keep in touch with them. So yeah, thank you all. I think on this note we will close for today. Uh, Navin, Navneet sir says you are already creating delta. Thank you. I'm really happy to hear that you found this useful. So yeah, with that, let's close and wish you all the best. See you next week. Take care.